this week. It's going to be a crucial one, particularly as far as monetary policy locally, with the RBA announcing its rates decision tomorrow, and in the States we get that non-farm payroll figure too. All right, to take us through those events, Pete McGuire joining us from XM. Pete, always good to catch up on a Monday morning. So let's start in the States. I was going through some of that data there we saw on Friday, also out of the Eurozone at the same time. But just as far as perhaps what the Fed will be looking at this week, it is that key non-farm payroll number, isn't it?
Absolutely. Good morning, Andrew. Yeah, Friday, we're expecting that around about that 255,000. So a contraction from what we experienced in June at 372,000. And that's till the middle of July, as we know. So, summer driving season and summer hiring season. So let's see how we are in a couple of months' time. But 255 doesn't shoot the ball out of the park. And if that R word is embedded into our economy moving forward, then I think it's going to be a very interesting couple of weeks ahead.
Yet, as we heard last week, certainly the Fed not regarding the US economy being in a recession, even technically, despite 2 quarters of negative growth there.
Well, that's,
go
that's
on.
interesting, because I went to a US business school in Philadelphia called the Wharton School, and they tell me that two quarters mean it's a recession. So I'll have to go back and talk to one of the professors, I think.
Well, if that's the case, then what can we see going forward, particularly as that tightening remains?
Well, I think they'll have to, you saw that number come out, as you saw, 8.9% for the Eurozone inflation. If it keeps on ticking up, there's only one way forward, and that is to, ratchet up rates. So if the Fed's 75, let's see what they do. As we know, they don't do anything in August. So September is the next point moving forward. We've seen pressure to the downside on that US dollar. It's being sold off, just under 106, 105.50 sort of number. So 105.94, I said. So all the currencies have been moving fairly strongly, as far as a retracement from that weakness. So July goes down, Andrew. It was just an incredible month as far as traders. It was a trader's delight.
Yeah, absolutely. So looking forward then, Pete, particularly as far as currencies are concerned, if we're seeing further weakness, particularly, well, I guess not only in the US, but globally, where do you expect the US dollar to go?
Well, I'm expecting probably a little bit further softness. It's come back well and truly from that 108.50 sort of handle, now under 106. So I think possibly even 105, maybe 104.80. There's technical sides to it, of course, and just the overall a little bit further weakness. You're looking at gold, Andrew, and I just look at that as, what's happened over the last month. It's moved from 1805 or so down to 1700, back to 1780. It's, massive moves that we've been able to appreciate. And then, when you're looking at what happened as far as the currency front, that US dollar, really whipsawing and coming under, softening pressure.
Yeah, certainly those movements in gold has been confounding for all of the gold bugs out there. It was up around 3.5%, I think, over the past week, but it remains to be seen, obviously, whether it can sustain that move higher. Pete, let's bring it back locally and look, of course, the key event being tomorrow's RBA meeting. What's your expectation there?
50 basis points, Andrew. I'm, hand on heart. I think that's what they'll probably do. We've got also Bank of England this week, whether we're going to see an acceleration as far as their hiking cycle. So, that's where we're looking. Stay on course, stay with the big picture. All the papers I read internationally and our market team are saying, 50 basis points is pretty much baked in, but maybe they're going to surprise us. Who knows? They know the numbers better than us.
How concerned, Pete, with the RBA being on what's going on in the housing market at the moment? We just had those latest figures from CoreLogic there showing just the rapid falls we're seeing, which we haven't seen this since the GFC back in 2008. How concerned would they be about the effect that those rising mortgage rates are having on the housing market?
Well, they've got to have that's the consumption phase, and that's what's happening on Main Street. And the housing sector is a very large part of our overall economy, Andrew. And as we know, people deem their wealth on how their property is performing, and if it ratchets up. I remember listening to Alan Oster in a presentation from NAB, head economist, and he was saying, the correlation between psychology of as the price increases, so does the overall wealth factor or wealth feeling. So if there's a contraction of price, then that would certainly dampen spirits. And yeah, the RBA's got to be very conscious of that from a psychological factor.
And Pete, oil, what are you seeing there at the moment? It has come off somewhat, though obviously sitting well above $100 a barrel at this point. Well, just taking a note of that latest survey from Reuters of oil analysts and economists expecting it to come back somewhat, particularly, I guess, on the basis of global economic growth falling.
Well, let's see. We've got OPEC meeting, OPEC Plus meeting, and this week, and will they pump more oil, Andrew? So from a consumption side, it seems to be very much line ball. I wouldn't be surprised they turn the spigots up a little bit further. The Russia situation, what's going on as far as demand, if weather outages, if we see hurricane season start to amplify, and this is the time of year that it really takes into effect, August, September, and what disruption that can have to the US fields. I think we're going to be, it could be a very, very volatile quarter moving forward. August, September, October can be very dynamic for energy markets.